the stock market crash in the first and second quarters of 2020 was a big blow to many investors, and then followed by the dividend cuts and cancellation. Therefore, one could say it was one of the worst years for FTSE 100 as it plunged to its lowest level, say between 7 and 11%, suffering its worst drop since the 2008 financial crisis, meaning a large percentage of so many company stocks crashed. Meanwhile, as the sky clears at the end of the fourth quarter in 2020, there is hope on the horizon in 2021 for investors. So stay tuned. Welcome to my channel. Grab a cuppa, of course I mean a cup of tea, and then subscribe. Meanwhile, some of the stocks who plummeted include the likes of large growth stock, defensive and cyclical, etc. Well, if you ask me, I would say good news is on the horizon. More so as we have now witnessed the development of a vaccine for the cure of the virus. And so what does it mean? Well, it means, quote and unquote, sky is clear and business activities will soon be back to normal. In effect, some companies would bounce back. Okay, let me break it down further. You see, we have what is known as cyclical stocks, and they are divided into 4 categories. The likes of basic materials, consumer cyclical, financial services, and real estate. And these stocks have a peculiar nature. They follow the economic cycles. I mean, they will go down during recession or market crash and up again when the economy recovers. Meaning they are very fluid. What am I trying to say? Okay, stay with me. Financial services, I mean banks in general, are cyclical stocks. And as the economy recovers, banks like Barclays, Lloyds, HSB, and NatWest will bounce back. Well, as you can see from this chart, this is Barclays chart. And then what do we have here? We have the bank in consolidation mode within August to say September thereabout. And then the 50 moving average is above the 20 moving average on the downward trend. Then what do we have, say, from November? We have the bullish momentum candlestick indicating we are now changing the trend to upward trend. So what do we have? We have the 20 moving average above the 50 moving average in that sequence on the upward trend. Okay, let me quickly explain this. You will definitely experience this. The stock is going to test various resistance and support level. You should expect that because stock does not move on a straight line. It moves in the form of waves. So that is normal. But one good thing is the trend has changed to upward trend. Similarly, I did check Lloyds Bank, same pattern. The bullish momentum is what we are experiencing now. The 20 moving average above the 50 moving average, which signals bullish momentum. And to bring to your attention, some of the banks in the UK are now in the process of restructuring. I mean, they are now taking cue from the concept of fintech. What does it mean? Well, you see, financial and then banking landscape is evolving to what is known as financial technology. Fintech, if you like. So, what is a fintech and what is the impact? Okay, stay with me. Fintech is an innovative creative technology in the design and delivery of financial services. And this concept has introduced a paradigm shift within the traditional banking system. To know more about fintech, check my video titled How Fintech is Creating Bank of the Future. What will happen to traditional banks? You'll see the clip at the end of this video. And then, in the recent development, banks have been permitted by BOE, Bank of England, to start dividend payment. So in my opinion, if you do not have stocks of any UK banks, time to start buying. And if you have some, time to start pound or dollar cost averaging. More so because at the current prices, it's a good bargain. Why? Because they are now at a good price, if not undervalued. Okay, next on the list is the defensive super sector with three sectors: consumer defensive, healthcare, and utilities. And in this video, my focus is on consumer defensive and utilities. And just to remind you, with consumer defensive stocks, sales of products and services never goes obsolete. Like, alcohol and wine or beer in general never go obsolete. Okay, they may be temporarily affected because of the closure of Bassey Wetherspoon, for instance. Nonetheless, people still order drinks online and in stocks like Aldi, Tesco, and Sainsbury. And then, what will happen when the economy eventually recovers? Sales will definitely boomerang. Okay, what stock should you buy? Well, I say Diageo. Diageo is a global leader in beverage alcohol with an understanding collection of brands, across spirit and beer. And then, if you like Guinness, you should invest in this company. Well, why did I say so? You will make money as you buy and drink Guinness. And to remind you, Guinness beer has a unique economic moat and competitive advantage. Next is the Unilever. They are into foods and refreshment, home care, personal care, utilities. And in my opinion, this is a good company to invest in. A very reliable company with a business moat and competitive advantage. Okay, let us look at the financial report quickly. At a glance. Let's have a look. What do we have here? This is just a glance. Now you look at the summary. We have 52 billion pound turnover and a 6.1 billion free cash flow. Okay, 4.2 billion in dividend payment. Okay, now let us look at the breakdown. What do we have here? In BG and personal care, we have 21.9 billion turnover, 42% of total turnover, 52% of total operating profit. Let's look at food and refreshment. We have 19.3 billion turnover, 37% of total turnover, 32% of total operating profit. Look at home care, 10.8 billion turnover, 21% of total turnover, and 16% of total operating profit. Okay, what does this mean? Let me quickly say. Well, you see, it means there's consistent growth in sales and revenue, consistent growth in net income, and then consistent growth in cash flow from operations. I say it doesn't get better than this, and there's room for growth as well. And then another company is Imperial Brands. It's also a good buy. And then we have Britvic PLC. It's a good stock to invest in. And the company produces soft drinks. You see what I mean? And then to let you know, they produce something like J2, Tango, and now they have the franchise of Pepsi drinks in the UK. Okay, here comes the best part. Subscribe, like, and comment. Remember, the goal is to generate wealth, build companies, and create jobs. Bye now. See you soon.